Saturday, January 3rd, 2026, Maneco 64, home of alternative economics and contrarian views. Well, yesterday I spoke about the Federal Reserve and the fact that they've done like 46 billion in QE in the first 3 weeks of December. They announced, of course, in one of their meetings late last year that they're going to start doing 40 billion a month after the end of November. And I told you I would update you going forward because they were supposed to publish more data. They're supposed to have done it Thursday, but it was a holiday, so they did publish it yesterday. We're going to look at that, and I can tell you it's not good in that they've done a lot. So the Federal Reserve has done the most QE since March 2023. Do you remember what happened in March 2023? Well, we had that regional banking crisis, Silicon Valley Bank and others, and the Fed had to step in and stop the QT and actually do quite a lot of QE. So we're going to look at that today. But before we do, I want to talk a little bit about silver, and I want to tell you that I'm publishing an interview tomorrow morning, Sunday, the usual time that I publish videos, 10 a.m. London. Usually don't publish anything on a Sunday. We do a live stream at 8 p.m. London. We're not going to do the live stream tomorrow. I might be doing it today. I'll have to see because tomorrow, unfortunately, we have guests and family the whole afternoon and late in the evening. So it's going to be hard to do the live stream. We'll definitely be back Sunday next week for the live stream, and hopefully Clive will be back as well. Yes, I saw Clive reporting from Montana, where they had that horrible disaster. And not good, is it? I've been there many times, usually in the summer when I used to live in Switzerland, because I used to play the amateur golf circuit, and they had some good tournaments up there. Beautiful course up there, very scenic. It's where they play the European Masters, Montana. So not nice start of the year there. And anyway, back to silver. What I wanted to tell you is that, I'm publishing an interview I did with Eric Young tomorrow morning. And we covered thoroughly what's going on in terms of this new regime for export control. There's a lot of speculation whether it's going to be done or not, if it's a nothing burger. And I think Eric covered it really well. And yes, I was contacted by my friend yesterday who's got a lot of sources in central banking. And yes, I'm not a fan of central banking, but I used to work with this friend of mine years ago when I came to London. Yes, he eventually got some big clients. He's retired now, but he hears from them. And what he's telling me that he thought was really significant is that we've heard, of course, that India and the Gulf cooperation countries are buying not just gold, but a lot of silver, right? And he was telling me that these two countries, just two countries, I know India is a big country, has a big population, most populous country probably in the world. I think it's just ahead of China, about 1.4 billion people. But Saudi Arabia as well, just these two are buying 55 metric tons of silver per month. That's the pace they're at. I think this the free float of silver and the free flow of silver, that could be a big problem. And we spoke about that, Eric and I did yesterday. And of course, the interview is coming out tomorrow, so I highly recommend you watch that. And aside from the interview, I also covered a really interesting pure silver mining opportunity in Argentina. It's a junior exploration company, but I think you will enjoy that. So that's what's going on in the silver market. I noticed that yesterday, yes, the markets were very strong early on in the day, like when I recorded early morning London, and then they came back off, but still finished fairly firm. For example, gold was up about $10 from the close of last year, and silver was up about $1.20. So it wasn't that bad. I know it was up a lot more. And the stock market was pretty steady. The Dow gained about, let's say, just under 300 points. S&P gained about 20 points, and actually the NASDAQ 100 was down. But back to the Federal Reserve. So, and talking about the Federal Reserve, we're going to look at the Treasury market as well, because I think this could be related to the Treasury market. The fact that they're doing a lot of QE. So, as I reported yesterday, they've done 46 billion from the beginning of December to the 24th, to Christmas Eve, 46 billion. And I told you I'm going to update you on what they did in the last week. Well, brace yourselves, because they ended up the whole month of December doing 104.83 billion. So they did almost another 60 billion in just the last week of December. And don't forget, they had told us they're going to be doing only 40 billion, and that they're going to be doing buying short-term treasury bills, like up to a year. So why the extra, like almost 65 billion? Well, I think it's because of liquidity and problems in the financial plumbing of Wall Street, the whole system, right? We also seen that the repo market, that the Fed repo operations, which usually is nothing really. They don't need to do it. The repo market is usually amongst financial institutions. Not the Fed doesn't step in. It only does when financial institutions don't trust each other. So yeah, yesterday I reported that on December 31st they done 74.6 billion in repo. Yesterday, actually they did they did over 20 billion. They did 23 billion in mostly in treasuries and also mortgage-backed securities. So, and that's on top of the QE they've been doing. Of course, next week we need to check on Thursday, late on Thursday London time, how much QE they will have done in the first week of January, right? That will be very interesting. So what do I think is happening? Well, I think they're concerned about the treasury market, because as you can see here, the yield curve yesterday steepened. That means the short-term rates stayed pretty steady, but the long-term rates went up by like almost 5 basis points, which is fairly significant. And we're seeing like the 30-year yield approach 5%, and also the 10-year yield approach like 4.20. And as you can see here by this chart of the 10-year yield, we're very close to a breakout of a trend line. And of course, higher yields is a bad thing for bonds. It means that prices are going down and yields are going up. It means that the U.S. Treasury if they have to auction off or issue new debt at that maturity, they're going to have to pay more, right? That's never good. And also, I spoke to Michael Oliver about a week or so ago, and he was telling me about the T-bond future. The T-bond future is based on the 30-year yield, and the price of that doesn't look very good. The chart here, as you can see, is like a bear flag. And he told us in the interview that 111 would be the key level. So we're still quite far away from there. We're around 115. But keep an eye on that. You can find that future on investing.com under financial futures. It's the 30-year T-bond future. So I think that's what's going on, even though it's impossible to know exactly what the problems are within the financial and banking system. But one of them is that they don't like to see the long-term yields go up. And I wonder if they did more QE yesterday. I wonder if the 10 and 30 yield would have gone up even more if they hadn't stepped in. We don't know yet. We'll have to see the numbers next week. So as I said, the last time the Fed did so much QE, as much QE as it did in the last week of 2025, was in the period from March 8th, 2023 to March 22nd. Those 2 weeks, they did 391.5 billion in QE, and don't forget at that time they're doing QT. They said that was not QE, right? But it was just a bailout of the regional banking system. What are they bailing out now? Is it the treasury market? Is it again the regional banking, let's say, sector? Is it the Wall Street banks? Who knows? I think, yeah, there's a lot more under the surface, under the hood, or the bonnet, as they call it in the UK, that we don't know about. Of course, mainstream won't talk about that. I mean, all I saw here in the UK yesterday was headlines about the fact that the FTSE traded at 10,000 for the first time ever, which to me doesn't mean much, because the FTSE reached 7,000 back in late 1999. So it's not really been a stellar performance in the last 26 years. If you really want to look at how the FTSE is done, plot it versus gold. And versus gold, it's not doing well. This coming Friday, we've got non-farm payroll. And from what I hear and from what I'm seeing, there's a lot of like auto loan default is rising quickly. Default consumer credit default in general is rising. Commercial real estate is not out of the woods. And of course, we've got a lot of debt to be rolled over, not just by the U.S. Treasury, but commercial real estate, private equity. So it's all not clear sailing, I would say. Of course, the mainstream will embellish everything, and so will Wall Street. Just wanted to also say that if you're new to the channel, if you enjoy watching my videos or my reports, make sure you subscribe to the channel as well, and make sure you hit that little notification bell. I post content, well, virtually every day. And with that, I'm going to wish you all a very good weekend. Take care. Bye.